Hey gang, Matt from Easy Breakout's about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So when we take a look across the board, a repeat of Friday essentially, we have the major indices backing off all-time highs with only the NASDAQ extending on the gain. So we've been talking about this, how ever since the post-election rally occurred, we've been seeing very strong Dow, very strong Russell, and a relatively weaker NASDAQ. This time we are actually seeing the reverse, so maybe a little bit of rebalancing, renormalization back to the way it used to be. But folks, as we see it right now, Dow, S&P, and the Russell off from their all-time highs, and the NASDAQ extending it out to the 5530s in terms of all-time new highs here. We saw the crude backing off, folks. This is starting to look a little wary, and we'll see this on the charts. And then the gold and the bonds catching a bit of a bid, and we'll see that as well. But as always, starting off our analysis with the S&P 500 dailies. So we can see here, folks, that we tried to break to all-time highs on Friday. Then on Monday, backing off right below that breakout level. It's a little bit clearer here on a 60-minute chart. Not technically the best action. Obviously, whenever you break out from a resistance level, you'd like to see the continuation of a leg higher. Immediately failing the breakout level or fading down below it kind of points to a picture of a lack of demand, a lack of buyers up and over those levels here. So on the S&Ps, we're going to still have to wait for a little more confirmation. The two areas to watch down below, the 2233s right down in here, and always the as we've been mentioning here, the 2215s. Those are going to be the two areas to watch in terms of defensible positions. As we take a look at the NASDAQ here, NASDAQ had a very nice day, extending out its gains to new all-time highs, and folks, we're starting to see that relative strength line starting to turn up just a little bit, and we were mentioning how it's coming from some of the big cap names out there. So the NASDAQ is kind of generating some gains off the back of Amazon, Facebook, Apple, and in fact, if you take a look at these names here, the Amazon recovering somewhat off of those lows, taking out some of the key levels we were mentioning in prior videos. Facebook doing the same, right? Getting over some of these key resistance levels, key moving averages, and building the right side of a base. And then you've got some of the other bigger cap tech names like Apple extending on its breakout that it started from Friday on some good volume too. And we had the likes of Google also putting out positive gains here on this Monday trade. So this is all helping the NASDAQ to regain some of its strength. Now, as we move over to some of the external markets here, taking a look at the crude is starting to fail. And one of the things we had pointed out in our Easy Live room, our trading room, is that this 54s is starting to look and behave like a bit of resistance. The first time we gapped right up into it, we faded down, and then we recovered back, kind of formed a little bit of a shallow cup and handle, tried to break out, got up to 5520s, and then failed again. Folks, earlier in Monday, we got right back up to those 5420s and then fading all the way down to the 5178s. So folks, it's starting to look like this bit of a lift that we've encountered in the crude over the last month and a half or so, starting to fade away. Some supply, potentially some sellers coming in right at the 54 level. So folks, as always, you know, we've been watching the 52s, but also the 4920s. I think the 4920 still has to hold. The crude has a potential chance for an upside rally, but the 4920s have to hold. If we move over to the bonds here, taking a look at the 10-year bond yields, finding support just a few weeks ago, and then continuing that run higher. So bonds have actually been bid coming off of these support levels. And then also on the gold, taking a look at the gold, getting above the 1170s here, and now starting to get up to, almost actually got up to the 1187s today. I'm kind of thinking that there might potentially be a test of the 1200s, kind of a retrace, a test back of some of that earlier selling we saw starting at the latter part of 2015. So watch for any sort of strength in the gold to be met with a little bit of supply, potentially some sellers as we get up into the 1200s. As we move over to individual equities here, folks, so we've actually had a lot of great swing trades here. A couple of names actually popping today. One of them was on our daily stock picks. It was this HQY Health Equity. This actually broke out on some really nice volume here. We had listed buy points right around the 4210s, so right over this area right here. And folks, this closed the day up at the 43s, really nice, up almost 6% on the day. definitely institutions stepping into this. So folks, even though the markets are kind of backing off a little bit soft, folks, we're still focusing in on the best relative strength names, breaking out of recognizable chart patterns, and on volume. Those are the names that we're going to be looking at. So folks, other than that, stay alert, keep watching for those breakouts. They are happening, they are being treated well. And other than that, have a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.